Hey, welcome to Satisfy Personal Finance. Today I'm going to talk about a very important form of coverage that your insurance agent is either unwilling or unable to provide you with, and that is disability income insurance. Now, disability income insurance is extremely important, and I would say that it ranks second after your hospitalisation plan when it comes to getting proper coverage in Singapore. If you're a working adult in Singapore and you have never heard of disability income insurance before, I urge you to watch the entirety of this video because it can be the most important video you have ever watched, at least for your personal finance. It's the longest video I made, but trust me, you will want to watch it all to form a more informed decision about your insurance coverage. Now, the reason why disability income insurance is so important to us is because most of us rely on our jobs as our main source of income. And if we were unable to perform the job duties of our occupations, we'll be in quite bad shape and we can forget about retiring, maintaining our quality of life, going for holidays, paying the mortgage and bills, etc. Before I move on further, please be reminded that this is not personal financial advice and should not be taken as such. You should make your own choice and exercise due diligence when it comes to your financial choices. So this is how disability income insurance works. When you buy the policy, you can choose your monthly benefit amount, which is capped at 75% of your gross monthly salary. And you can choose a few tenures ranging from expiring at age 55, 60 or 65, which are typical retirement ages. In a case of total disability, which is defined as a medical inability to work in your own occupation or similar occupation, this policy will come in and provide you with your monthly benefit and thereby replacing your income which you have lost because you're unable to perform your job duties. And this is an extremely important form of coverage because most of us derive our livelihood from our jobs and we are the golden goose that lays the eggs. So if the golden goose is sick and unable to produce the eggs, that's it. No more income for us. Forget about retirement, forget about fire, forget about paying the bills and everything else. And I can assure you that most Singaporeans have not heard of this policy before, much less buy it, and therefore this represents a major form of underinsurance for a lot of working adults. The moment they get any kind of illness or medical inability to work, they are pretty much, I want to say a curse word, they are pretty much out of luck and they are going to be in very bad shape. So this is very, very important. Some of you might think, hey, I have TPD coverage already. If I get a disability, I'll get 500,000 to maybe even $1 million of coverage. That should be enough, right? Now, TPD actually stands for Total and Permanent Disability, and it is a very severe form of disability which is defined as the total inability to do any occupation. Whereas for disability income, it's defined as unable to work in your own or similar occupation, which is much more reasonable than totally unable to work in any occupation. Think about it, if you're a hotshot lawyer and you're unable to work due to major stroke or a form of cancer that renders you bedridden, you're unable to work in your professional capacity as a lawyer, but medically you might be able to sit on a wheelchair and sell tissue by the roadside. That still counts as an occupation, I think. Right, so in that scenario, you actually do not qualify for TPD. In any case, TPD also requires it to be permanent, and therefore if your condition has any chance of recovery at all, there's also no payout even if you can't work in any occupation for that 5, 10, 15, 20 years. So disability income insurance is a very specific form of insurance that covers for such events. Some people might think, hey, I have early critical illness coverage, I don't need disability income insurance, and I think that is quite misguided because they are very different in their intended purpose and coverage definition. Early critical illness coverage may give you a lump sum payout on early forms of cancer, kidney failure, those sort of things, but they do not relate to your ability to work. So let's say if there was a car accident and the person is unable to work, early critical illness does not cover for that event. Or if there's a newfound disease in the future, like let's say COVID-25, and the person cannot work due to that, early CI again does not cover because it does not fall within the list of critical illness specified by the insurance company. Disability income insurance, on the other hand, does not specify the conditions leading to the inability to work. As long as a doctor is certifying you that you're medically unfit to perform your job duties, you will get your income replacement, and therefore that's a world of difference in terms of coverage. In fact, even if they cover the same thing, which they don't, even if you buy early CI coverage, you have to buy in a lump sum, and how much are you going to buy? $50,000, $100,000, or $200,000? It gets expensive when you increase the sum assured. Whereas disability income insurance, you buy a monthly benefit and it's paid to you for as long as you are unable to work in your occupation or similar occupations. It can be 5 years, 10 years, any number of years until the selected retirement age when you first bought the policy. So there are some people who have been disabled for the rest of their lives, and that is something that disability income insurance will actually pay until the person's retirement age. That is something that lump sum payout policies like TPD, CI, early CI cannot replicate. In any case, the way I see it, if there is a medical condition that happens, let's say major stroke or major cancer, first, your hospitalisation bill will be taken care of by your SHIELD plan or your hospitalisation plan. And the next question mark will be, hey, can I continue working and maintain my quality of life? And that's covered by your disability income insurance, which comes in to replace your income. And then if your critical illness policy also pays out, there is a lump sum that is meant to help you cope with a higher cost of impairment, such as if I need to renovate my apartment for wheelchair access, or if I need to hire a nurse, right? Those are costs above your normal standard of living, and that is taken care of by the lump sum payout. So they all serve different purposes, and I would say that your disability income insurance takes the second priority after your hospitalization plan. How about CareShield Life? Is CareShield Life the answer to our disability coverage? I don't think that can fully take away your disability coverage needs, because while total permanent disability is the most severe, CareShield Life actually covers for the next level of severity, which is activities of daily living. If you can't perform certain activities such as mobility, toileting, etc. That is actually less severe than TPD, but it's still a lot more severe than a disability that renders someone unable to work. Let me give some examples. I rely a lot on my voice to work, and let's say I somehow lose my voice. Can I claim under TPD or CareShield Life? The answer is no. It does not meet the requirement of either disability coverage. Whereas for disability income, the answer is yes, because I need my voice to conduct my job duties to earn income, and a prolonged period of voice loss can actually lead to a lack of income, and therefore disability income insurance will cover me for that and give me a monthly payout. If someone's occupation is driving and he gets tinnitus, he may be unable to drive medically and thus will lose his or her job. And therefore, disability income insurance will also give a benefit that replaces his income for as long as he has that condition, up to specified limits. So the definition of disability actually depends a lot on your job, and I've actually heard that some people think that this is too vague and therefore they don't like this coverage. Now, think about it. If your hospitalization plan gave you two options, one, they only pay your hospital bill if your reason for hospitalization falls within a list of conditions, or two, they will pay whatever is medically necessary ordered by the doctor. Would you pick one or would you pick two? I think most people will pick two, because as long as it's medically necessary, I want my hospital bills to be paid for. Now, the same thing can be said for disability income insurance. I don't care what condition causes me to be unable to work medically. It can be cancer, stroke, or something that has not even been around yet, right? 5 years ago, we don't even know COVID was a thing, and now COVID is actually a thing that can cause people to be unable to work. Now, that will be something where vagueness actually is in our advantage. In fact, I think it is as clear as day. As long as it's medically unable to work, I can get my payout and my monthly income replacement, and that is much better than a list of specified conditions. Now, unless you're heir to a business empire or you're a boss and you can get passive income through your businesses, disability income insurance is very, very important for the rest of us mere mortals, because we really rely on our jobs to survive. So why aren't more insurance agents recommending this to us? Now, the number one reason why they don't is because only a pathetic 3 insurance companies provide such coverage. Now, if you want a savings plan or an ILP, insurance companies are more than willing to sell you those policies, and you can take your pick amongst the many insurance companies we have in Singapore. But when you want something as useful as disability income insurance, only 3 companies provide them: AIA, GE, and Aviva. That's it. If you speak to any other agent from outside these companies, no disability income insurance for you. Number 2, most financial advisors and insurance agents are not that financially savvy themselves. In an industry where the remuneration is commissions, they are actually financial salespeople. And obviously, when the company you represent does not have such a product, you're not going to learn about it, you're not going to brush up your knowledge about it, and you're certainly not going to recommend it to your clients. Like I said in my previous video, if all you have is a hammer, everything looks like a nail, and that can't be truer than tight agents that fall outside all these companies because they don't have the proper solution to a gap in many Singaporeans' insurance portfolios. The third reason why this is so uncommonly recommended is because it covers so much that if you have a hospital plan and you have this disability income insurance, you are actually quite well covered in most regards, and you don't need that much insurance anymore, aside from maybe some critical illness and death for income replacement for your loved ones. And that's it. It's a term policy that's relatively cheap and the commissions are not high, right? As an agent who is paid by commissions, I would rather sell you a whole life plan or an ILP that leaves you underinsured, so that next year I can sell you even more coverage because your salary have increased, and I'll say, hey, now you need 100,000 more, 200,000 more, 300,000 more, instead of a policy that can actually pay you on a monthly basis for as long as you require the payout. Right? So why would I sell something like that? You have to be aware that there are a lot of pirated products that pass itself off as disability income insurance, but actually they're like TPD, or they also name themselves as disability something, okay, but they're not true disability income insurance products, which is a very clearly defined product that provides a monthly benefit upon medical inability to work in your own occupation. So you got to be careful about imposter policies. And the reason why I heard on the grapevine why so few insurance companies offer such a product is because the reinsurer actually does not like this kind of risk versus return ratio product. Of course, this is only what I've heard. I can't really verify it. Another reason that I think is quite true is that most people will not buy things that they're unfamiliar with. When you talk about critical illness or even savings plans, most people are quite accepting of buying such policies because they have heard of it. But when it comes to disability income insurance, because so few agents can recommend, they have not heard of such policies, and thus they don't buy such policies, which leads to a vicious cycle of agents not recommending such policies. In the end, it's just very hard to sell, so why bother selling something that is low profit, leads you to be so insured that it's very hard to sell insurance in future, and my company don't have it anyway, I'm not going to recommend you that. Now, I would say go and ask your financial advisor for disability income insurance, but like I said, quite a few of them cannot provide it. I think IFAs would be able to provide 2 out of 3 of those policies, so they can at least help you to do some comparison. Now, to me, the main competitors in this field are between GE and Aviva. They both have some unique selling points that I think are worth considering based on your preference. So if you would like to know more, please fill out the form below and I will direct you to an advisor friend whom I think would be trustworthy and reliable enough not to recommend you things like ILP, savings plan, etc. and chop carrot head. I'll say that the main selling point for G's offering is that their definition is they would pay for as long as you are unable to work in your own occupation throughout the policy term. Whereas for Aviva's offering, they can increase the payout by 3% per year to defray the effects of inflation. Aviva's policy will continue to pay for 2 years as long as you are unable to work in your occupation, after which it will be reassessed as whether or not you can work in an occupation that is similar to your occupation by reason of experience and training. So if you are a doctor, for example, and you cannot work in your job as a doctor, they cannot say, hey, you can work as a painter, you can work as an odd job laborer, and therefore we will not continue paying. Right? Chances are, if you cannot work as a doctor, you probably cannot work in occupations that are similar, right? So I think this is not that big a concern, but some people might disagree. They might think that my own occupation is very unique, so I want the G policy. For me, I feel that I quite like the escalating benefit of 3% because if this is a long-term disability, the inflation will actually erode the monthly benefit. Right, in 10 to 20 years, your payout of let's say $5,000 now will be much smaller and inadequate compared to the present $5,000. And when it comes to premiums, premiums are typical of a term policy. It's actually pretty affordable. I would say that for about 1% of your income, you should be able to cover 60 to 75% of your monthly income, depending on your occupational class. Riskier occupations, of course, have to pay more. And if you're in a very niche occupation, let's say you're an actor, they actually don't want to cover you because it's too high risk. So have I convinced you that disability income insurance is very important in Singapore, or are you a scion of a wealthy family in Singapore? Let me know in the comments below. And if you like my content, you find it useful, please subscribe to my Telegram and my YouTube channel. Drop me a like. These are all appreciated and go a long way in helping me provide more advice online. As usual, I'll see you next video.